Hello and welcome to Yadnya Investment Academy. Today we are going to discuss about section 80G, which gives deductions on your donations. Doing charity is a noble task. Not just the God, but the tax department acknowledges this fact as well. Therefore, you get more than just good karma for donating your income to charitable institutions. Section 80G of Income Tax Act offers a tax deduction on contributions made to certain charitable institutions prescribed under the Income Tax Act. All taxpayers are eligible under this section. Starting financial year 2017-18, any donations made in cash exceeding rupees 2000 will not be allowed as deduction. Therefore, the donations exceeding rupees 2000 should be made in any mode other than cash to qualify as deduction under section 80G. In-kind contributions such as food material, clothes, medicine, etc. do not qualify for deduction under this section. Now, to be able to claim this deduction, the following details have to be submitted in your income tax return: name of the donee, PAN of the donee, address of the donee, and amount of contribution you have made. Donee is the institution where you have donated your money. As a documentary proof, you should have stamped receipt from the donee you have made the payment. Such receipt should have name, address, and PAN of the trust or institution. Receipt should also include the name of the donor, that is you, and details of amount donated, and the registration number of the trust under section 80G, and the validity of registration must be mentioned on the receipt. Now we should also talk about form 58 here. So if your donation is eligible for 100% tax deduction, then you also require a form 58 from the trust or the institution where you have donated the money. Details like cost of the project, amount authorized for the project, and actual amount collected by the institute is mentioned in this form 58. Form 58, without it, your claim for 100% tax deduction can be rejected even if you have a stamped receipt. Here is the format for this form. Now let's talk about the maximum deduction you can get under this section. Some donations qualify for either 50% or 100% tax deduction, whereas some others qualify for the same deduction but up to a maximum limit of 10% of adjusted gross total income of the taxpayer. So broadly, they can be divided into these four categories. Donations made to some institutions is eligible for deduction without any upper limit, while there are some others where the maximum amount of deduction is limited as per the prescribed provisions. Before knowing which institutions are eligible for which type of deduction, let us understand what is adjusted gross total income here. Adjusted gross total income for this purpose is calculated as gross total income minus all exempted incomes, that is tax-free allowances received like HRA, LT, etc., or agriculture income or dividend income from mutual funds, etc. Second, you have to deduct is long-term capital gains from it. And the third is all deductions which are under section 80C to 80U except of course section 80G, since we are discussing about it. So when you deduct all these three things from your gross total income, that is the total income without tax, then you get gross adjusted income. So if your gross adjusted income is suppose rupees 10 lakhs, then this category here will have upper limit of rupees 1 lakh, that is 10% of this 10 lakh. So even if you donate more than rupees 1 lakh, here you will get maximum 1 lakh deduction and maximum rupees 50,000 deduction in this case. But if you donate only rupees 80,000, then here you will get deduction of complete 80,000 only, and here you will get deduction of rupees 40,000. Now let's see the institutions which fall under these four categories. First is donations eligible for 100% deduction without any qualifying limit. So if your donation in these institutions, you will get 100% deduction and there is no upper limit. So even if you have a salary or gross adjusted income of rupees 10 lakhs in a year and you donated all rupees 10 lakhs in these institutions, then you will get tax deduction of complete rupees 10 lakh rupees. Institutions donations which qualify for 50% deduction without any upper limits are these. So here, taking previous example, if you donate rupees 10 lakhs, you will get tax deduction of only rupees 5 lakhs out of it, and for rest of 5 lakhs you will have to pay the tax. Now here are donations which qualify for 100% deduction subject to 10% of adjusted gross total income. So here you will get 100% deduction but subject to a limit as discussed before. And these are the two type of institutions. Donations eligible for 50% deductions subject to 10% of adjusted gross total income are these. Please remember, trust and institutions registered under section 80G are provided with a registration number by Income Tax Department, and donors should ensure their receipt contains this number. This registration number needs to be valid on the date of particular donation. If the donation is made while the section 80G registration is not valid, then the donation would not be eligible for the deduction. Now, donations made to political parties and scientific research can be claimed as well, but not under this section. Section 80GGC offers tax deduction for donation made to political parties, and section 80GGA allows deduction for donation for scientific research, and we will discuss about it later in a separate videos. So that is all we have on this topic. If you have any question, please do write in the comment section below. Before we close, we want to tell you about our new financial planning portal where you can create your financial plan for free. More details are in the description of the video. That is all. Have a great time ahead. Jai Hind.